Well, welcome back to another Black Fire technical analysis instructional video. And today's video is going to be on the 21 exponential moving average strategy. Very, very simple strategy. It can be used on any time frame, although higher time frames obviously take precedence over lower time frames. You can have success with this strategy on lower time frames, but statistically, you will have a higher percentage of success on the like on a daily or a weekly or a higher time frame, something like that. And it's a very, very, very nuanced strategy as far as the simplicity and how to improve the strength. There are different couple of angles that we can use for this strategy to become very, very profitable over time here. This is actually a strategy that I actually started using not too long ago. Once I learned a little bit more about it, and once I took a second look at this strategy, I was like, holy crap, this one's actually this is actually pretty simple and pretty non-convoluted to follow. So we're gonna go ahead and start off by showing you guys how you can get exponential moving averages. Again, this is an exponential moving average strategy. We're gonna go to our indicators here. We're just gonna type in EMA. Right, moving average exponential. I'm not going to click this one. This isn't one that I use. But once you do click it, you'll have it here on the side, and then you can just go to your settings. Obviously, you're going to go, to any one of the moving averages. Set the length to 21 and the type to exponential moving average here. Right. I'm going to go ahead and turn off all my other ones because for this strategy, they're basically irrelevant. Again, it's a very simple strategy. There is a lot of power in the simplicity of this strategy, and I want to go ahead and go over it now. So what we're going to do, obviously, we're going to go ahead and get our 21 exponential moving average in place here, and the strategy is quite simple. Okay, and we'll go on in the past here and look. Look for some examples, right? Where do we see some examples? All right, we'll go with this one right here, okay? Go with this one right here. So here's the strategy. If you get 2 consecutive candle closures above the 21 exponential, that's a long position. If you get 2 candle closures below the yellow 21 exponential, you short. That's it, guys. Thanks for watching. I hope you guys enjoy. I'm just kidding. I'm joking. There's going to be more examples, more nuances that we're going to discover and talk about here. But just by looking at price action itself, we can see how powerful. Even if you traded this blindly, statistically, if you traded this blindly, you are statistically more probable to be more successful than not successful over time. Again, it's over time that we're looking for now. And here's the strategy in its fullest, right? We're gonna look at an example here, right? Right here we got we got our candle closure technically right here, followed by our second candle closure, and then we got a little bit of a back test, right? This is where you could enter. We're gonna get our little drawing tools, right? Here's where we here's where we crossed below. Here's our second confirmation candle closure below. Here is our entry point. And then what do you see, right? You see a little bit of a back test. On this particular example, you want to use your risk management. 2%, right? 2% is the risk management point. Enter your risk management point 2% above the yellow 21 moving average here, right? And we do see a little bit of a wick stab that's pretty close to hitting the top of that. Not that close though, but you do see that we did use this region as resistance, confirmed it as resistance, and continued to the downside. Now the particular point of this strategy as a standalone strategy is to enter upon confirmation below, ride the wave, and exit upon the first cross up, right here. Obviously, with different strategies, different nuances, you can make this strategy much more powerful. Now we get we get to an example that doesn't work, right? We get to an example that doesn't necessarily work here. We got that nice parabolic move above the yellow 21 here. You get your second candle closure here. if you're using it blindly, it's a good idea to enter as low as possible and chop off some profit on the first green day, right? Unless you're using different strategies alongside of this, if you're using it as a standalone strategy, you're gonna wanna take profits on the first green day, right? I mean, you're taking the confirmation that this is actually a breakout, right? Because you can see how this one doesn't work here, right? We consolidate as a result after, and then boom, we break down. A little bit of a fake out here. First candle closure below the yellow 21, second candle closure below the yellow 21, confirming it. Enter, and then ride it to the downside until we get this point. Candle closure above, confirmation candle closure above, 2 times above the yellow 21 moving average. Now, entering along on this position obviously would have kind of faked you out a little bit, but you can see on a daily where it works and where it doesn't work, right? But there are plenty of examples of where it works extremely well, especially here, right? We get this low, this higher low right here. We blast off above the yellow 21 moving average. Back test, confirm your second candle closure above. Enter, boom. Back test. Maybe you can mitigate your positions and mitigate your risk upon this level here. Maybe tightening up your stop loss, or maybe even adding more to the position upon this confirmation test. Boom, another back test. Boom. You don't really exit this position until this candle closure here. So if you went candle to candle on this particular example, we can easily get you 26%. Now, in confluence with other indicators, what do we want to see, right? Horizontal support and resistance. Probably one of the best indicators, best tools that you can use for this style of strategy here. Again, it's just one moving average. Very, very, very simple. Very, very simple and very nuanced interpretation for this strategy. But if you get some horizontals in there, you can definitely make this strategy a lot stronger. And I'm not going to add too many more indicators. I think maybe just stochastics, RSI, so on and so forth. I think this is coronavirus dump times here, and we take a look at our stochastics here. Right, here's your dump, right? Obviously, if you're a lot more aggressive, you could have easily bought this low here, but we're going based off the 21 moving average strategy alone, and we're just looking for ways to kind of add a little more power to that, right? Again, it's just one moving average, and we can easily mitigate our risk, manage our risk based off the moving average itself. And we do see RSI here putting in that low. Nice continuation drive to the upside. You get your first candle closure above, second candle closure above. You can enter, right? And this is an example of where you kind of want to, chop it off on the first day, because we do see a back test of this support, confirming candles below the L21 moving average. And, for all intents and purposes, that could get scary. You're mitigating your risk at the 21 moving average here, and pull back into 21 likely pulls you out unless you chop off some profit right here. But we do see on this second little run up, we get this first candle above, we get this second candle above. We enter on the third day, boom, back test. Never really closed below it. However, if you decided to mitigate your risk and manage your risk by moving it up to the yellow 21 moving average on further future price action, you would have easily gotten stomped out here, assuming that you were using a 2% risk management buffer, if that makes any sense. We do see these wick lows here. Again, there are plenty of nuances on how this works and how it doesn't. But typically, if you enter and then exit the following day on the first green day, you're statistically to be more profitable over time than not profitable. Very, very, very easy strategy. We can go over a couple of more examples. Maybe look for a more powerful one here. Here's a real good one right here. We got our confirmation here, right? And then we just kind of put in this rounding bottom. But technically you could have entered here on the 9th of February 2019. Yeah, you would have lost a bit. But if your risk management was 2% below the moving average, you likely wouldn't have gotten stomped out, right? And then what do you see? We see a little bit of a recovery. Boom. Parabolic uptrend. Nice little boost. I mean, you can, easily, let's see the percentage on that move here. If you decided to enter here, you're looking at 13%. From my perspective, that is a very juicy position. Nice little pullback, consolidation, confirmation close. If you wait till that confirmation close, you likely enter with only a little bit of profit. That's why we want to use other indicators in confluence, right? We want to use other indicators to kind of tell us a little sooner when it's the right time to pull out, because after we hit this top here, boom, nice sunken move, nice just devastating candle to the downside, back to the L21 as a result here. But here's another better example. We get this nice bullish candle back above the L21 moving average one day, and then the second day it's confirmed above. Enter here, and this is the move. This is the move that you got. This is one of the extreme examples where it works very, very well. Where did we enter? Here. And you don't really exit until here, about 102%. So, that's pretty much the gist of it. Buy when you get two candle closures above the L21, close and sell short when you get two confirmation candle closures below the L21. Very simple strategy. Again, it's not guaranteed to work every single time. Nothing is guaranteed to work every single time. This is, the cryptocurrency market. It's pretty violent, but for the most part, it can be technically profitable, more profitable statistically over time than not. And that's it, everybody. That's the L21 exponential moving average strategy. I hope you guys liked the video. If you did, please hit that like button, please hit that subscribe button, tick that little bell. And until next time, guys, stay safe, stay happy, stay healthy. Peace.